Rahul Singh, Head of Research with StanChart Securities, joins us live now. Rahul, good morning. Thank you for joining us. Rahul, the big story last week was Infosys, and the big story today is TCS. Based on what we've got from Infosys and TCS, are you convinced that large cap IT stocks, they've turned the corner and 2013 could be a good year for them?
Obviously, these are good signs for the IT services sector, and it's important for the sector to do well, because otherwise there was a lot of froth in the valuations of the other defensive sectors, primarily consumer. So to that extent, it's good for the markets, looking at it very practically. But on a more fundamental note, we are slightly cautious and will prefer to watch for one more quarter whether these pricing signs are just one-off or whether there is something more to it. Infosys is obviously slightly different kind of a story, because it's coming out of a trough and of its own internal issues. So to that extent, Infosys might continue to do well, also because of the severe underweight which people might have had on that name. But on the sector as a whole, we continue to prefer the mid-size to smaller size players like HCL Tech and Tech Mahindra. These are our top picks over Infosys and TCS.
Rahul, hi, morning. Are HP, BP, IOC a sell on news when the fuel price hike actually comes about?
It depends on what the news is. I think if the news is 1 rupee or less than 1 rupee a hike for the next 12 months, and if the excitement leads on to the stocks, I think that will be an opportunity to sell on news, because we know the electoral calendar this year. It will be very difficult to sustain, in my view, that kind of a measure throughout the year. If there is a one-time hike of say 4.5, 5 rupees, whatever is being talked about in the press, that may not lead to too much excitement for the oil marketing companies beyond the level where they have already gone. It might actually be very good for the upstream companies. So in the oil PSU space, we prefer to play it through the upstream companies, and they have also participated in this rally. Among the downstream companies, while we have a cautious view, if the government does go ahead and bite the bullet and announce a phase-wise, month-wise kind of increase in prices, I think HPCL would have more upside than BPCL, simply because it's much more leveraged, and BPCL also has the E&P part, which is now a very big part of valuation. So purely from a mathematical point of view, HPCL will have more upside than BPCL.
Rahul, for the year 2013, expectations are high. I wouldn't say high, but they're extremely high. But do you believe the rebound in real economy, corporate risk appetite, investment cycle, that will lag expectations, and down the line, Indian markets will be disappointed?
I broadly agree with that. I think the earnings have not gone up in the last 3 months too much. I mean, there have been minor adjustments upwards. The good thing is the adjustments are happening upwards and not downwards anymore. But it still does not justify the kind of move which we have seen in the markets in terms of the valuation. And also from a valuation point of view, we have to see that since September, the domestic policy cycle and the global policy cycle has been in sync. So that has led to some kind of an accentuated response in the markets without really waiting for earnings to come up. We think it's getting a little late in the day for us to expect material upside to FY14 earnings, because we have seen signs of consumption slow down in this quarter. We believe that you will see even staples confirming some of that slowdown. We've seen the infrastructure plays not really looking at FY14, but much beyond that for any kind of an uptick. Because even if the capex cycle revives, which I hope it does after the constitution of CCI, the impact on earnings is back-ended for any new project announcements. It is not going to come up in FY14. So really, the odds are stacked against any material kind of an earnings upgrade in FY14 from what I can make out looking at it from a sector to sector point of view, apart from some upside from the weak rupee in the tech sector or in the commodities sector. Beyond that, it's looking a little difficult to forecast a material earnings upgrade from where we are. We are forecasting a 12% earnings growth next year. Can 12 go to 13, 14 maybe, but I don't see how it can go to 17, 20% kind of a range. That's where we are right now, frankly.
Rahul, how do you see, or rather, how are you approaching cane now post the government nod to hike Rajasthan output?
Yeah, we see it as a positive. We see that as a positive in what we essentially see as it's a good asset. So if you're patient with the asset, then you will get your upside returns from an operating momentum point of view. I think the production growth will continue to come through. And there are issues surrounding what do they do with the cash and so on. But I think in 2013, the operating momentum should offset the risks on the cash usage and so on. So I'm quite optimistic on Cane's prospects for this year, for this stock.
Rahul, from the cement space, ACC continues to be a top pick. Now, the minute I look at valuations, AV per ton for ACC, it's not expensive, but it's wildly expensive.
Sorry, I didn't get your question.
Right, my question was on ACC because as a house, your top pick from the cement sector is still ACC. What makes you bullish on ACC? Because if I look at the fundamental matrix, which is AV per ton, ACC is quite expensive.
It is less expensive than some of the other names like Ambuja and Ultratech, number one. Number two, we are bullish on the entire cement pack. So it's a question of which one you select within the cement sector. And the reason why we are bullish is the same reason what we have held for the last 1.5 years. In fact, it was a big contrarian call for us, and it has done phenomenally well. It is going through some kind of a consolidation phase because prices have corrected in the last couple of months. But we think that's an opportunity to buy rather than getting worried on the fundamentals, because now the capacity utilization is actually increasing. And remember that if there is a recovery in the capex cycle, cement also benefits, because till now we have seen demand growth of 5 to 6.5% purely from housing in cement. If infrastructure cycle kicks in and we come back to 8-9% kind of growth rate for cement demand, then the utilizations will go up very fast. So in my view, to put it very simply, cement is a very, very low risk option to play the infrastructure capex recovery as and when it happens. And in the interim, you're going to have decent earnings, you're going to have decent cash flows, you have good balance sheets. So we have seen how so-called expensive valuations can stay expensive, or even can get more expensive if the visibility on the cash flows and future growth is there, which I think is the case in the cement sector.
Also, if cement, stroke pharma and media, these were three sectors for the year 2012. What do you mind could be the big sector of the year for 2013?
I continue to think cement will do well. Materials, cement stroke materials. Now within materials you have to be careful of not buying the integrated players. You have to be more opportunistic. In terms of the other sectors, I think consumption will take a bit of a breather. We are quite bullish on pharma. We think still it will continue to do well. There are still a lot of levers for growth. We like Dr. Reddy's, Cipla and Lupin in roughly that order. Also we think there is a case for IT services to do slightly better than last year. Not a huge outperformance, but a little better than last year because I think rupee itself would lend some growth, some inherent growth to the sector. And I think we have to be selective in some of the infrastructure names. We like JPA, for example. We think that's probably the best pick, JPA and Adani. I think one will have to be selective and a little bit more opportunistic and fleet-footed in some of these names. But the curve is upwards in some of these infrastructure names rather than downwards over a 2 to 3 year period.
Rahul, what happens to Reliance, considering a lot of institutional names are now finding favor with the stock again on the 4G rollout report and hopes of some development at the KG Basin? A, is it worth building positions there? And B, what about ONGC on the other hand, in light of the rising subsidies and the kind of realizations that are coming under pressure?
So on Reliance, I think the valuations are in a bit of a no man's land. We can, I think there are events happening which can improve the outlook for the gas production, but that's very back-ended, 3 to 4 years out. So a lot of gains a lot of upsides in Reliance are now unfortunately back-ended, whether it's the gas production or the 3 new projects which they are building. So unless we start to factor in some of those kind of upsides which are very back-ended, we cannot justify beyond the valuations which are there currently. And therefore, I think the stock will move with the market. Frankly, I think it will be a market performer. I don't see it to be a huge market underperformer or an outperformer from here on. If you look at ONGC, I think ONGC has always been a stock which has been beaten down because of the subsidy issue. Now, if there is confidence that the government is actually trying to do something, whether it helps the OMCs or not, the oil marketing companies or not, it is definitely going to help upstream at the margin. There are no guarantees, but I think with the way the government is going, they will definitely like to reduce their budgeted subsidy which they give in the union budget because of the fiscal deficit constraints. But it will also improve the visibility for ONGC. Even if it does not change the earnings, it increases the confidence level in those earnings. And that is what I think the stocks will reflect. I think it can go to 10 times. So I can see a stock going up another 5 to 7% from current levels, which is where it will be valued at 10 times. And that is where we need to reassess whether reforms are actually happening or not. Otherwise, it has moved. It was lying at 7.5, 8 times. It will probably stabilize at around 10x levels.